Okay, Apes, no nonsense, real serious talk. Let's get right down to it. I even suited up for you. That's how serious this is. I'm just kidding. Had client appointments. Okay, I want to know, guys, a lot of talk. I'm having a lot of talk with my friends in real life, my online friends now, you guys, my family, my familia. Fuck, I shouldn't say that. That's a Richie reference. Ugh, I want to puke in my mouth. I'm not Italian. But yeah, real talk. You know, this conversation's going on a lot. What are you going to invest in post AMC squeeze and the fucking MOASS, baby? A lot of interesting conversations. One of my friends, this guy's a big swinging dick. He's got like I think over 5,000 shares now. And he says he's done. After this is over, he's fucking done. He's not putting another penny into the stock market ever again. It's fair. It's fair. You know, Wall Street has fucked us pretty hard for quite a while. Now, I'm in a similar belief myself, and that's the conversation I'm having with some other people. They're already talking about some stock plays, some sectors, some markets that they want to maybe go into, taking their money maybe outside of the equity markets and into some real estate. Some people are talking crypto, NFT, all that shit, right? There's a lot of talk going on. So I'll tell you what I'm going to do. This is what my plan is. Because like I kind of alluded to earlier, I'm in the camp where even though there's bullshit in the stock market is still an incredible tool and place to create, sustain, and pass along wealth. So I don't see myself exiting the stock market forever. Not at all. Not even close. Like my portfolio, I have a very strong portfolio right now, a core portfolio, whereas AMC it's not a huge chunk of my portfolio, as a strong, sound portfolio should be. Not everything should be 100% in one single security. So some of you new investors to this play, I'm kind of talking to you now, I guess, is if you're going to move on from AMC, and you're going to become an investor and actually be an investor, the first place you got to start is, like anything, is a solid plan and a strategy. What kind of investor are you? What kind of investment strategy do you have? What kind of risk tolerance do you have? What is your investment horizon and timeline? Are you in the markets 5 years, 10 years, 15 years, 20 years? Because all of these things matter, and all of these things determine which securities you pick, how much risk exposure you have, how much your portfolio is weighted to equities, to bonds, all that kind of stuff, right? Fixed income to equities, sometimes bonds, people call it fixed income. It all matters, right? So it all starts with a sound strategy. So are you a growth investor? Are you a value investor? Are you a dividend investor? Are you a contrarian investor? Are you a sector specific investor? Are you a not sector, but market specific investor? Like, do you invest in the European markets, in the emerging markets, BRIC, things like that? BRIC, by the way, is an acronym. So Brazil, Russia, India, China, which are typically referred to as emerging markets. So there's lots to learn, right? Now, where I see, if you want to know my investment strategy, I am mostly a dividend kind of value contrarian guy. So a little bit of each, right? I really love my dividends, because I fucking love getting paid to wait. And I love my money working harder than me, which is also why I have a lot of real estate, because I love cash flow. I love my money producing money. And then you take that money and you put it in other things. That's how true compound growth happens. So I really love my dividends. With a little splash of contrarian. I like stocks that have been beaten up and been forgotten by the market, as long as the fundamentals are still strong. You know, sometimes stocks get beaten up and forgotten by the market for a reason, because they're fucking dogs and they go behind the barn, or they should go behind the barn and get shot. But sometimes, like I talk about in other videos, right? The efficient market hypothesis theory. Sometimes stocks get missed and forgotten by accident, not on purpose. The fundamentals are still strong and things are still, the market just hasn't realized it yet, right? So I like those plays. I like buying things that other people aren't buying. So, for example, last, probably 5 years or so, oil has been getting its ass kicked. Everybody's been selling oil. I've been buying oil. Gold, same thing. Gold has been kind of getting beat up a little bit. So I've been buying gold. One of my favorite plays, and this is where I'm going to get into what I'm really going to be heavily focusing on going post AM squeeze, and I'm already doing it right now, is a mix of both contrarian and dividend play. And I really like the old age retirement home sector and play, because what we are going to see, or what we are seeing with the baby boomers transitioning into older ages now, and they're getting up there, is we are going to see the largest demographic shift in all of history. The baby boomer cohort is the biggest cohort right now. And they are about to go through the biggest demographic change and shift, like I said, in all of history. So I really like that sector, that play. Buying good, I'm not going to say specific stocks or securities because that would be advice and I don't want to get sued. But I really like these stocks. Some of them are even REITs, which if you don't know, a REIT is a real estate investment trust. So they pay nice juicy dividends. They have, I think, what I think is long-term growth. So it's the best of both worlds. You're getting paid to wait, but then you're seeing that good long annualized year-over-year growth. Now I capitalized hard in 2020 when you know what happened. The pandemic started, the beginning of it all, when all this shit hit the fan. 2020 was actually, I didn't quite time the bottom perfectly. Not everybody can. But in April, May of 2020, these old age retirement home stocks were on fucking fire sale, and I loaded up. And I loaded up on specific ones because with dividends, you don't always buy the yield because a high yield might not be sustainable. So I looked at stocks that my 4 key dividend stress tests or metrics, you want to call it, you know, the dividend payout ratio, the dividend coverage ratio, the free cash flow to equity ratio, and then net debt to EBITDA, earnings, EBITDA, what is it? Earnings, EBITDA, can't remember the acronym. Anyways, it's earnings before income, taxes, and debt, I think it is. Anyways, that's slipping my mind right now. So I looked at companies at the time were paying like 15-16% dividend yield, and I mean, obviously there's always a risk, but I felt the ones that I loaded up on, I was like, this dividend yield is high, but I think it's safe, it's sustainable. And since then, these stocks have recovered. They've now 40-50% covered because they got hammered, as you would expect, right? These old age homes just got the shit kicked out of them during the pandemic. But it was unwarranted. Everybody was just panicking, right? So now these stocks have 40-50% gained in their price. They're not back to pre-pandemic levels, but they're now paying more realistic dividends, 6, 7, 8%. But mine are still paying me that 15-16% yield because of the time that I bought them. So going forward, that is going to be a sector that I am really going to be focusing on and investing in heavily, as well as continuing to invest in real estate. Excuse me, I have my real estate portfolio is all single family detached homes, and I really want to start getting into multifamily residential and then also development. So that space in the real estate play is more capital intensive, more capital required. So that's what I plan to do with my my attendees, is to start buying up some apartment buildings and then start buying up some land and developing. So that's where I'm going with things. I want to know what you guys are doing. Like, what are your plans? Are you going to be going after more meme stocks? The sundials, the progs, and all the, we know the list. Are you going to be going after more of those plays, more short squeeze plays? Or are you going to be getting down to some fundamentals and some core? Like, guys, if I can offer any advice, it would be this. You want to have a core portfolio, a core, rock solid portfolio of good fucking companies that pay dividends. And if they don't pay dividends, that's fine, but still good, solid companies. Companies that have just been around forever. They're gonna continue to have growth, not so much speculation, and then dabble a little bit in these speculative plays, but don't have your whole portfolio in that stuff. So let me know. What are you guys planning on doing? I want to know. I'm curious. Let's chat about it down below. What are your investment plans post AMC squeeze? Let's talk about it. Peace.